Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world and sometimes find ourselves a bit lost in translation. Today we're diving into an amendment to a filing from a SPAC to Acquisition Corp. Now SPACs are always an interesting ride, and this one has taken a bit of a detour. Stick around as we decode what is going on. Before we get into the nitty-gritty, if you love getting straightforward insights from these complex corporate reports, do us a favor and hit that subscribe button. And if you want to connect with us and other finance enthusiasts, join our Discord community. The link is in the description below. So what we're looking at here is an amendment to a previous annual report. Think of it like a company going back to correct or add some important details to their yearly financial story. The big reason for this update is something called a re-audit. Basically, the company brought in a new accounting firm, Fund Certified CPA Professional Corporation, to take another look at their financial statements for the years 2024 and 2023. This often happens if there is a change in auditors, like in this case where Markham Asia CPAs LLP was dismissed and Fund Certified CPA Professional Corporation was engaged. This change in auditors is a pretty significant event. It can sometimes signal that the previous auditors found something concerning, or it could just be a strategic decision. In this filing, they're mainly releasing the financials with the new auditor's stamp of approval. The good news is that Fund Certified CPA Professional Corporation did not find any major issues that required changing the numbers themselves, except for one key detail. The deadline to complete a business combination has been extended. This is a crucial point for a SPAC, as their entire existence is tied to finding and merging with another company. Now let's turn our attention to the actual financial statements. This report section is the auditor's opinion on the company's financial health. The auditors, Fund Certified CPA Professional Corporation, state in their opinion that the financial statements present fairly in all material respects. The company's financial position and operations for the years ended the 31st of December 2024 and 2023. However, right after that positive statement, there is a big asterisk. The auditors flag a going concern issue. This is a really important signal. It means that based on the company's current situation, there is substantial doubt about its ability to continue operating for the next year. This is common for SPACs nearing their deadline without a deal. They are a special purpose acquisition company, or SPAC, and their main goal is to merge with another business. The problem is they have a deadline to do this, a deadline that has now been pushed to the 5th of August, 2027. If they don't find a target and complete a business combination by then, they have to wind down operations and liquidate. The auditors go on to say that a SPAC to Acquisition Corp lacks the necessary money to keep running and to complete a deal, even with the extended deadline. This is a serious warning sign for investors. Let's look at the balance sheet as of the 31st of December 2024. This gives us a snapshot of what the company owned and owed. They had a little over $140,000 in cash. That might sound like a lot, but for a company that needs to fund a business combination, it is not much. And their investments held in the trust account were about $4.5 million. This trust account is where the money from the initial public offering is held, meant to be used for the business combination or returned to shareholders if the SPAC liquidates. Their accounts payable and accrued expenses, essentially what they owe in the short term, were around $280,000. Now here is a significant liability, a deferred underwriting fee payable of $7 million. This is a fee that the underwriters are owed, typically only paid when and if the company completes its business combination. It is a big chunk of money hanging out there. So their total liabilities were about $7.4 million. And the kicker, their total shareholders deficit was a negative $7.3 million. This essentially means the company owes more than it is worth, which ties directly back to that going concern warning. Moving on to the statements of operations. This shows us how the company performed financially over a period. In 2024, their general and administrative expenses were about $610,000. These are the costs of running the business, like legal and accounting fees. As a result, they had a loss from operations of about $610,000. This is expected for a SPAC that isn't yet operating a business. However, they did earn some interest on their trust account investments, about $754,000. When you combine the income and the expenses, the company reported a net income of around $155,000 for 2024. And for the Class A and Class B ordinary shares not subject to redemption, they reported a net loss per S-share of about 9 cents. Now let's look at the cash flow statement. This tracks the actual cash coming in and going out of the company. For their operating activities, they used about $461,000. This means their day-to-day operations consumed more cash than they generated, which is again typical for a SPAC. Here is a big number, $18.1 million withdrawn from the trust account to pay for shareholder redemptions. This means a lot of investors decided to get their money back rather than wait for a business combination. Overall, their net change in cash was a decrease of about $301,000. Diving into the notes, we get more context. Again, it is confirmed as of the 31st of December 2024, the company had not started any actual operations. Their activities were focused on formation and searching for that business combination. Here is that deadline again, extended to the 5th of August 2025. This is a critical date. And back to that going concern issue we saw in the auditor's report. They are very clear here. With only about $140,000 in cash and a working capital deficit, the company is in a tight spot. They have until the 5th of August 2027 to find a business to merge with. If they don't, the company triggers an automatic winding up and liquidation. This means the money in the trust account would be returned to shareholders, and that is it. This section explains how they account for shares that can be bought back by the company. These shares are treated as temporary equity, meaning they're not considered part of the company's permanent ownership structure because they can be redeemed. The redemption value per S-share was about $11.56 in 2024. Looking at the table here, in 2024, over 1.6 million shares were redeemed, leading to payments of over $18 million. This shows a significant number of shareholders are exiting their positions. Warrants are essentially options that give holders the right to buy the company's stock at a set price. These warrants allow holders to buy Class A ordinary shares for $11.5 per S-share. Interestingly, the company can redeem these warrants if the share price hits $16.5. This is a protective clause for the company, allowing them to potentially force the exercise of warrants. The rights are another component that entitles holders to a fraction of a Class A ordinary share when a business combination is completed. So for every 10 rights you hold, you get one Class A ordinary share if the SPAC successfully merges with another company. Now, putting it all together, a SPAC 2 Accession Corp is in a precarious position. They've extended their deadline to find a business to acquire, but they have limited cash and significant liabilities. The fact that so many shareholders have already redeemed their shares indicates a lack of confidence in the company's ability to pull off a deal. The auditor's going concern warning is the most critical takeaway here. It means the company is at a real risk of failing to find a business combination and potentially liquidating by their deadline. Their future hinges entirely on striking a deal and raising additional capital, which looks increasingly challenging. Alright, that is our breakdown of a SPAC 2 Accession Corp's latest filing. What do you think about their chances of finding a business combination? Let us know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more, and don't forget to join our Discord community linked in the description for some great conversations. Thanks for watching, and we'll see you next time on Corporate Decoder.